So good day and welcome to this discussion. We are privileged to have with us top executives from two of Canada's largest pension funds, CDPQ and OMERS, who have more than $300 billion and $114 billion in net assets, respectively. Prateek is Managing Director and Asia Head of OMERS Infrastructure, and Leng is Managing Director and the Regional Head of Asia Pacific at CDPQ Global. So welcome, Prateek and Leng. Thank you for joining us. Now we're speaking this morning about the Canadian pension funds making a big shift towards South and Southeast Asia. So for CDPQ, I understand that the bulk of exposure is in North America, and Asia Pacific accounts for about 12% of the total portfolio as at December 2020. For OMERS, exposure to Asia Pacific is about 10%, I think. So maybe to jump right in, just wanted to find out how have your allocations to sort of the South and Southeast Asia region changed over perhaps the last 5 years? Maybe Leng, you would like to take this first?
Sure. I think because we don't actually break it down into South, we basically just look at it as Asia Pacific. Mm-hmm. So I think the whole context is that if you look at what we have done over the past 5 years, we've actually doubled our investments in Asia Pacific. And the other region that we have also increased allocation, we've almost doubled as well, is the US. So obviously both of this growth have come at the expense of our home country, Canada, as we look to construct a more robust, portfolio.
Right. For Prateek, I mean, we've reported that OMERS is also looking to double its allocation to Asia by 2025. I mean, how's that coming along? So how has that changed over the past 5 years, and where are we now?
Yeah, it's actually interesting when people ask me that, well, are we going to double our exposure? I don't know where that word double came from, but I think what our CIO definitely wants to do is have a significantly increased exposure from where we are. Just to put in context, so for us, Asia Pacific, obviously it's Australia and then it's Asia. So we have an office in Sydney, we have an office in Singapore. Our Australian office started way back in early 2014. And we've done 2 large investments there, Port of Melbourne and Transgrid. And our Asian expedition started in middle of 2018 when we started our office in Singapore, and we've done 2 investments in India. So if I just look at Asia without the Australian side of things, it's definitely a core focus, and not just for infrastructure, but OMERS as a whole. To expand our balance sheet. Whether that 10% goes to 20% or not, the idea definitely is that over the next 5 years, a significantly larger part of our balance sheet should be having exposure to this part of the world.
Right, but what's driving the sort of increasing allocation? And as a follow-up to that, how will it look like, given that across the core markets, dynamics are quite different? Maybe Leng again.
What's driving it? I think a few things, right? Because again, I'm not, I don't call myself an expert in terms of portfolio construct, but I think in terms of what we're really trying to do is to seek diversification. And that is why if we look at a lot of our peers and ourselves included, but diversifying across asset classes, and we are also diversifying across the region. And clearly, I think Asia Pacific, if you take away Australia, if you take away the more developed markets like Japan, because they're clearly in a different category altogether, although we group them under Asia Pacific. And if you look at the rest of Asia, or the rest of Asia Pacific, that's namely China, India, and then to a certain extent, Southeast Asia, the dynamics is completely different. We're talking about a relatively young population from a macro basis. You're looking at, very strong GDP growth, and perhaps I think more attractive to a lot of investors is that there's been quite a significant reform, I would say. I mean, I'm a Singaporean, I've grown up in Singapore, I've worked in China. And if you look at the reforms that have been taking place in this part of the world, it is very exciting. And I think that's really what's driving quite a lot of investments into this part of the world.
Right. But Prateek, I think OMERS is also actively looking at opportunities in Indonesia, the Philippines, Japan, and Korea. Perhaps you could expand on the potential you're seeing in these markets and also how investments will look like given the differences across these markets.
Yeah. So look, at a macro level for OMERS as an institution, I think the themes are very similar to what Weiling just said. It's the structural dynamics of the region, it's the demographics at play, which is going to have a fundamental growth, and not for the next year, 2 years. I think the next decade, we're going to see a very fundamental growth coming from this part of the world. If I then specifically look into the investing unit I work for, which is infrastructure, I think there is going to be a significant demand for infrastructure investments because of all the themes which were mentioned. It's the young population, it's urbanization, it's growing middle class, it's the propensity to spend, which all factors into a GDP growth, but also factors into increased spend on infrastructure, whether it's on the transport assets, whether it's on data side of things. I think Asia is also going to catch up, and it's already catching up in terms of greenifying their economy, and that's going to lead to significant investments in energy transition. So that's all the key drivers, if you call it, in terms of why we are, looking at what we call it as a growth part of Asia, which is Southeast Asia, some of the large Southeast Asian countries, India. In terms of specific countries, like each country has its own regulatory framework. Indonesia is different from Philippines, will be different from Vietnam. Each of the countries is going to follow its own trajectory in terms of private capital coming in and the interplay of private capital with state-owned enterprises. I think the underlying theme, however, what we're observing is that there is definitely a desire to open up their economies to private capital, especially in the infrastructure sector. It's the pace at which it opens up and which subsectors open up at what speed remains to be seen. I think in kind of the emerging or the growth Asia, India has definitely opened up much faster than a lot of other countries. The privatization plans in India are way ahead of many of the other countries, but the expectation is over the next 2 to 3 years, a lot of the other countries will follow what India has been doing in the last few years.
Right.
If I jump in, Michelle, if I move away from, first of all, I agree in terms of the infrastructure space. And if I move away from infrastructure towards, whether it's private equity, whether, and public equity, I think the other theme at play is that you see that we used to think of the world in kind of, developed versus developing. But today you are actually starting to see that when it comes to an interesting consumer internet play, right, that could actually happen in the US or it could happen in China. And then, so that's theme number one. And theme number two is that you then start seeing that, India is starting to develop its own ecosystem on that. And then, and when you then look at finally Southeast Asia, which is about a good 5-10 years behind, but still you can already see what has happened, for example, in China. And as a result of that, you start seeing a lot of Chinese investors who are looking at Southeast Asia because they have been there, done it, seen the growth. And so they are actually investing in Southeast Asia. So I think the world is actually becoming a very interesting place when it comes to investment because you can see themes running across regions.
Speaking of themes, so Weiling, I think in 2016, CDPQ established a strategic presence in India, starting with a 150 million commitment to the renewable energy sector. I mean, is this a particular theme that fits your mandate?
Definitely. I think renewables is definitely part of our mandate, particularly from two aspects. One is obviously ESG, because we have committed to being carbon neutral by 2050. We have committed to reducing our carbon intensity by 25% by 2025. But and that is from 2017. But the truth is, we have exceeded the target today as we speak. We're already at 37%, but we're not stopping there. So we are actually reframing as we speak this week, we'll have a new sustainability report and climate targets, that we will be happy to share. So that clearly, I think renewables from an ESG perspective is where we want to go. And secondly, in terms of, again, what I talk about a portfolio construct, infrastructure is what we are very keen in. Whether it's core or whether it's digital, that's an area that we continue to look at. So I think the market, we've actually shared with the market that we closed a big investment in offshore wind in Taiwan, and that was end of last year. So that, I think, just signifies that we remain very, very interested in the renewable space.
Right. Prateek, what about for OMERS? I think India, you've said before, is a priority market, but also we've seen investments across, utilities, renewables as well, digital infrastructure, telco, towers, and so on. What's the approach for OMERS?
So look, renewables again, or I would call it as a broader energy transition at play, is a global theme for us. And we think that it's going to pan out much more strongly in Asia. We're actually partners, with CDPQ on the renewable platform in India. For us, the way we look at energy transition, there is the existing asset base in Asia, which needs to be greenified and put on a sustainable footing. But this is a region which is growing at 4, 5, 6%, and that growth has to come from sustainable forms of energy or power. So there is, I think, going to be a huge demand for energy transition investments. So that's a key theme for us. I think the second element you mentioned is around the towers or the digital side of things, which again plays into the broad thematics I mentioned around the propensity to spend, the growing middle class, rising population, which leads to greater data consumption, which is effectively going to lead to need for more towers or improvisation on the existing telecom infrastructure, more investments on the fiber side, as the pace and rate at which data consumption grows within this region. More interest on the data centers side of things, especially not just data consumption itself, but the desire of a lot of countries to have localization of data, which is going to lead to more data center growths in these countries. So all of those themes play into a huge spend within these sectors, which play towards the overall infrastructure thesis.
Right. But looking at South Asia, the market, is it a particularly compelling story for OMERS and for CDPQ? And how do you sort of assess the risk return potential of increasing exposure in this market? Maybe Prateek, you want to continue?
Sorry, I missed that. Are you talking of South Asia or Southeast Asia?
South Asia first.
So we're talking of India specifically, right? So, for us, India is basically the country in South Asia where we are focused on. And, the reason, at least from OMERS perspective, why India is a key focus for us is the element of transparency we see within the regulatory framework, the openness towards the private capital, which has evolved over the last, call it 5, 10 years, the vibrancy of the credit markets, the vibrancy of the corporate sector, the prevalence of like-minded investors like CDPQ and others in the country, as well as the partnering options which we have with local sponsors out there, presents a plethora of opportunities which tick a lot of boxes in terms of what we look at from an overall investment thesis. I think if your question is, risk-adjusted returns, I think that's a question we all are grappling around the globe. What is the right risk-adjusted return in today's environment, especially when trillions of dollars are being pumped into the economy? So whilst, there is definitely analysis which is being done in terms of what sort of risk premia India should attract, I think that's a very nuanced kind of an approach. It depends on the sector, it depends on the growth, depends on the business plan, and kind of, what sort of an overall return you should be getting in India. But, fair to say that returns are getting compressed everywhere, and India or Southeast Asia is no exception to that.
Right. Wai Ling, did you have something to add to this?
I'm trying to see, what would I say differently, from Prateek. I think whether it's South Asia, Southeast Asia, or, the broader Asia Pacific, as I've articulated, we find interesting opportunities in different pockets of these markets. So we did, quite an in-depth strategy piece. So we don't, we find that for certain countries, it's not equally attractive across different asset classes for various reasons. Perhaps there's a lack of depth, a lack of breadth in some of the asset classes, but it's extremely attractive for some of the other asset classes. So I think we're actually taking quite a granular approach when we look at Asia Pacific. If that, it's a very long way of answering the question, but it is what we're doing.
Right. For back to Prateek, would you be taking a platform approach, for example, in that sense, buying and building?
That is definitely the thesis, because it comes back to the original point of why are we in the region. We are in this region for the growth, and to tap into the growth, the ideal way to do that is build a platform where the platform can then enable that platform to grow, rather than ending up doing 5 different deals in the same sector, which effectively is an inefficient way. So sorry, a long way of saying yes, platforms are the way, and that links into the fact that growth is one of the key drivers we are there in this region for.
Right. I want to move on to Southeast Asia now. So Wai Leng, I think in our last conversation with you earlier this year, you talked about investment prospects in infrastructure and private equity in Southeast Asia. I mean, even as allocations to the region, I suppose, remain small,
right,
relatively for you. So where are the opportunities in particular, do you see, in the emerging markets here?
Sure. I think for Southeast Asia, our thoughts 18 months later, it's still very much intact. So we find Indonesia to be quite interesting, actually, across many asset classes. So whether it's in infrastructure space, in private equity space, or even fixed income space, we find Indonesia rather interesting. And the other Southeast Asia country that we find very interesting is Singapore. Not for the deals itself, but for the fact that it's really a location where there are a lot of platforms. That's where it originates. That's where it is, the correct jurisdiction. So this country, we find that the deal flow is actually very attractive for us. So that's a second one. And then the rest of Southeast Asia country, I would say it depends on which asset class we're looking at. So for example, we find, pockets of opportunities in the Philippines. And for Vietnam, we find that it's an exciting market, but we don't see a lot of depth in that market because there's still really just a handful of, top players in there. But having said that, if we find the right partner, the right asset, sure, we will very happily take a look at it. Yeah, and the same applies for the other countries in Southeast Asia.
Right. I mean, understand that CDPQ is a long-term investor, but are there perhaps particular opportunistic bets that can be taken, maybe in a tech space, for example?
We don't even look at tech as opportunistic.
Okay.
Because when you say opportunistic, you're talking about the investment timeline that we get in and out. I think to get in and out, so no matter what it is, it's not in our DNA to be day traders. Sure. So that is clear. I think it's the same for OMERS as well. We're never going to be day traders and also the other thing is that without size, we're now 390 billion Canadian dollars in AUM. So our each deployment will be fairly large. And, if you're looking at a large deployment per ticket, then the truth is you would have gone through quite a fair bit of, deliberation before investing. So I think to do in and out, it's still not our DNA. But I think opportunistic in the sense that if, for example, we already like the market a lot, and the market dips for whatever reason, but if we still have a long-term conviction of that market, then sure, we will take the opportunity to load up on our exposure, subject to our internal limits and all. Yeah. Whereas technology, I think we are increasing our investments in technology across the board.
Would you like to elaborate on that? I mean, in terms of how will tech be a long game for you in that sense?
I think technology, first of all, if you obviously, we're still in the FANGs era and the BAT eras, so that remains very intact. But again, I think globally we have got a lot of technology-enabled traditional businesses. So those changes in business models will continue. So that's the second piece. And the third piece would be deep tech. So when you look at deep tech, does it have the ability to change the way we invest, the way we build? And in fact, I think that's a piece that I must say that we're still thinking through. But what is the impact if we tie it in with ESG? Mm-hmm. Because potentially technology will have the ability to change the way we construct, we consume, that will be, environmentally friendly, as an example. So then the question is, do we have enough technical knowledge to make those bets? And if not, what shall we do with it?
Right. I will come to ESG in a bit, but just to ask Prateek also, what is your view on Southeast Asia?
See, I think, there are countries which are presenting, and I'm speaking more from an infrastructure perspective. There are definitely countries which are presenting some interesting opportunities in some subsectors, right? I mean, we've seen movement in the telecom/digital space in Indonesia, some move in Philippines. There have been some renewable opportunities in Vietnam. So if I compare it again back to India, I think India presents opportunities across the entire infrastructure vertical. A lot of Southeast Asian countries will be catching up in the next few years, but there are still kind of subsectors within infrastructure which are interesting in these countries. So we'll selectively, we are selectively looking at some of these countries within those selective subsectors and positioning ourselves for the expected growth to come in the next few years.
Right. So coming to the question of ESG, just wanted to understand to what extent is the focus on ESG issues impacting the allocations to markets in this region? And I suppose particularly on the positive side in infrastructure, such as the renewables. Wai Ling, did you want to continue on this?
Actually, we look at ESG not just in infrastructure or renewables, it's actually across our entire portfolio. So whether it's public, private, real assets, we actually, just to give an example, we analyzed 355 files last year alone, just to evaluate, to make sure that it actually meets our ESG standards. So we actually take that fairly seriously, but it is still what I call defensive. And hopefully over time, we actually get onto the offensive with ESG, because there are opportunities, there are returns out there. So I think a combination of both defensive and offensive strategy will make a lot of sense.
Right. By which time? I mean, when do you see this actually happening, sort of going from defensive to offensive strategy?
Well, I think defensive, we're already doing it quite well. And offensive, we're doing it in pockets. And I'm quite sure that we will actually come to a more cohesive offensive strategy very shortly.
Oh, okay. For what about for OMERS, Prateek?
Okay, I mean, same thing. ESG is one of the key tools or a key parameter when it comes to evaluation of opportunities across any of the investing units. There are internal guidelines in terms of where do we want to take our overall carbon intensity of global portfolio. From a reduction perspective, we definitely want to reduce that. So any future investments is looked at with that lens of what does it do to our overall carbon intensity as well. So, that's part of the E. But then we also look at the S and G side of things whenever we're doing an investment. If I look at specifically infrastructure, we definitely try to look at things in terms of what is the social impact of that particular portfolio company. What are they doing? How is the overall governance framework working? So a long way of saying ESG, is a very key component of evaluation of any investments, in addition to obviously your returns and risk and all of that other things. And it's only gained prominence. It's gained prominence definitely over the last few years, and it's going to be the case going forward, in my view.
But what about, given your position, is there an opportunity to be more proactive in that sense in pursuing sort of ESG compliant opportunities in this region, given the developing nature of the infrastructure here?
So when it comes to being proactive, I think that is automatically, when the investment teams are automatically aware of the fact that there'll be certain elements of the infrastructure vertical now, which is going to be very difficult for us to invest in. Things around fossil fuels is very, very challenging, even if we are talking about the infrastructure side of fossil fuels, whether it's ports or transportation pipelines or any of those things. So that gets difficult. So there's automatically the filtering which happens in terms of the deals we look at are deals which are in the sector which puts the overall sustainability in the society. So I would call it that as a proactive way. And then from once we do the acquisition, then through our involvement at the board and a constant dialogue with the management, we also try to see if there are further aspects which can be enhanced from an ESG perspective of the future working within that portfolio company.
What about in the case? What about for CDPQ?
Being proactive, well, again, it is very much in line with what are we doing with the E, what are we doing with the S, and what are we doing with the G. So, for example, for the S and the G, we've picked a handful because it is very, very broad. And we can't, I don't think we are at the stage where we can do every single thing. So we've picked a few that we feel strongly about. So, for example, diversity, inclusivity. So that is something that we have put in place. So for the companies, whereby we have a significant share, that will be a 30% membership in terms of the board has to be female, as an example. So that is something that we are comfortable with in terms of furthering the agenda. We have also invested, so that is diversity and inclusivity. And then the other thing, for example, when it comes to tax, that's the other thing that we have signed up for, that we want to play fair when it comes to tax jurisdiction. So we work with all of our partners, be they GPs, our portfolio companies, as well as all external parties, that we want to play a fair game when it comes to tax jurisdiction. So that's a second. And then a third, is something as cybersecurity, for example. That is also one of our pet subjects that we've signed up for. So that, again, not only applies to ourselves, but also, just to give an example, when we actually do a pre-investment evaluation of our target investment, we actually conduct a cybersecurity evaluation as well, as part of our due diligence process.
So we've been told that So we've been told that in Asia in particular, or emerging Asia, the opportunity is in particular opportunity in governance, as investors. What do you think of that?
I think Asia, I would say that Asia is still very different from the US or Europe.
Mm-hmm.
And I think this is something that we as global investors have to be very cognizant of. So what are some of the local practices that we have to respect? What are, and what are the universal values that have to be adopted? And then everything else that falls in between would be what I call the gray, the 50 shades of gray. So how do we navigate that? So basically 3 buckets, if I recap, yeah? The universal lines whereby you're not going to cross is universal. And then some of the very local practices that you have to accept because you are investing in this particular country, in this particular region, and it is part of that business practice. And then in between is where you can have a debate on, what is it that you're comfortable with and what is it that you're not comfortable with? And are you able to get your partners to modify or to commit to a certain timeline to change?
Right. I think in that sense, have you come across any of these opportunities really to make a change in terms of governance, for example?
So, I mean, I would kind of agree with what Wei Ling just said. It's not about changing the governance. It's when you're looking at an investment, when you're looking at getting into any of the company or any of the asset, just need to be mindful of the local cultures, some of the aspects around the local frameworks, etc. But making sure that some of the universal aspects or some of the core principles remain there. There should not be a compromise of some of the core principles and underlying kind of themes on which we work on, but adjusting it to what the local culture is. And there's always going to be as these 50 shades of gray or 20 shades of beige color, which we always experience in Asia. You just have to be mindful of that and try to navigate yourself, but make sure that the basic principles are something which are adhered to, and then try to with the board governance and working with your co-investors and working with the management, try to implement whatever is the best practice suitable for that particular region.
Yeah, right. And I think, if I can jump in, basically, I mean, we at CDPQ, it has been drummed into all our minds that we are a pension fund. So we are held to the highest of standards when it comes to this. So when I talk about the 50 shades of gray, so we have to be very clear about what is it that we can accept and what is it that really absolutely needs to progress and change. And if not, we are not going there at all. So because I think that is really what is expected of us as guidance, because we are investing the public's money ultimately.
Right. I mean, exactly, as major global investors, that you have you're in a position to perhaps for change, in that sense. So, I mean, let's talk about the broader shift towards alternatives, I guess, particularly in this low interest rate environment. Just wanted to hear what are the other factors you think that could see more allocation to alternative assets, particularly to emerging markets in Asia. And also, to what extent is COVID-19 sort of impacting this? Maybe Prateek, you want to take this first?
See, I think I can definitely talk about an increased focus on infrastructure. I would not venture into other alternatives like real estate, etc., which is not my area of expertise. I think Leng will be a better place to answer that one. But there is definitely a desire now, whether that is on back of a low rate environment where people think going into alternatives can get you that extra premium, or whether it's a desire to diversify away from effectively what has been the traditional way of investing in terms of public equity, public bond markets, or treasuries, etc. There's a definite kind of shift of mindset in terms of diversification of your underlying asset base. I think those are the few themes which are playing, where we see a lot more investment going into infrastructure. In addition to obviously the fundamental focus which has been there across the globe in terms of the modernization which is needed in infrastructure, like as you see in the US national plans, as you see in the India's national infrastructure plan, in terms of the significant focus which has been put on infrastructure spend, whether it's upgradation, modernizations, which is needed to put the economy on a sustainable footing and to actually deliver the growth which is needed for the next decade. That's all the reason, in addition to the other factors we're seeing for money flowing into infrastructure as an alternative asset category.
Leng, I mean, pension funds are patient capital, but how do you, balance it?
Yeah, but if you look at it, we have been, gradually reshaping our portfolio to have, more weightage towards alternative, and that has started quite a few years ago. So, and that, whether it's infrastructure, whether it's private equity, and perhaps to a lesser extent real estate, that has been something that we have been working on, I would say, for the past, 5-10 years? And we're definitely, and I think that will continue, because so far our experience is that we're still able to generate a good alpha from part of that portfolio, and part of that portfolio is also defensive. For example, core infrastructure, if it's structured correctly, it's actually quite a defensive asset. So as a result of that, I think we will continue to play in all that space, whether it's public, it's private, or in real estate, or in alternatives. So the only thing perhaps is that, are we looking at, pushing the frontier to, for example, digital currencies, et cetera, that will be for another seminar, another webinar, I think.
Yes. Okay.
Yeah.
The other thing I wanted to ask was, we've been reading that pension funds across the board are increasingly looking at bypassing GPs in favor of direct investments, or at least co-investing with the GPs. I just wanted your take on this. Leng, I mean, for CDPQ, is it that over 75% of the PE portfolio is in direct investments? So I mean, what do you see?
I think a lot of our GPs will be participating in this seminar. So
Okay.
no, I mean, GPs to us will always be critical from the perspective that I think we acknowledge that we're not going to be everywhere in terms of physical presence. And I think that's really, a fact. I don't know about the staff strength of OMERS, Prateek. For our size, we're 390 billion. But really we're talking about 1,400 staff, and out of which roughly half are in frontline investments. So that already gives you a sense that we're not going to be everywhere without on-the-ground presence, and that is very different from our GPs, who tend to be on the ground with good presence. So I think the way to play is that we will always have GPs, perhaps not as many, but really the GPs who have got very good underground knowledge, who have got very good thematic understanding, or perhaps very progressive in how they think of the market. We will always have room for such GPs. Yeah, and obviously on the other hand, we will continue to build our own strength when it comes to directs and co-investments. And that cuts across all of our asset classes.
Right. What about for OMERS, Prateek?
So for infrastructure investments, we are a direct only investor. So we don't go through GPs.
Yeah.
I think for certain other investing units within OMERS, there may be a chance to have some investments to GPs. So that's kind of the way OMERS has invested. So infrastructure team does direct investments through our 5 offices which we have. But I do agree, sometimes it's probably in jurisdictions like Asia, where it's so widespread, GPs may have a better presence than some of the directs.
Right. Okay, so that is all the time I think we have for this afternoon. Thank you again for taking the time to join us on this panel, and I wish you a good day.
Thank you.
Thank you, Wai Ling.
Thank you.
And thank you,
It's been a
Prateek.
pleasure. Thank you.